Assalamualaikum and good day everyone. Today we will be presenting a report on the financial position and performance of companies in the Malaysian palm oil industry. Our group members include Fatin Nurfatnin Diana, Wan Nurizati, Anis Syuhada and Nur Amalin Nasuha. The four chosen companies for this assignment is Saim Dabi Plantation, IOI Plantation, FGV Plantation and KLK Berhad, the plantation subsidiary. A comparative analysis of the financial positions and performance of these companies will be measured against its liquidity, leverage, activity, profitability and market ratios between financial year 2017, 2018 and 2019.
Hi, my name is Fatin Nurfatini Diana binti Ahmad Nudin and I would like to present about liquidity ratio, which is current ratio and quick ratio.
Firstly, current ratio. Current ratio is a measure of short-term solvency and indicates the extent to which claim of short-term creditors are covered by current assets. Secondly, quick ratio. Quick ratio is a measure the company's ability to pay its short-term obligation without having to rely on the least liquid current asset. The bar chart represents current ratio from the different company over 3 years. The bar chart shows that all companies have average current ratio approximately 1.5 except for FGV Plantation on the year 2019. This indicates that the company is more likely to pay back the creditor. Large current ratio are not always a good sign for investor. If the company current ratio is too high, it may indicate that the company is not efficiently to using its current asset or its short-term financing facilities. Meanwhile, FGV Plantation current ratio on the year 2018 is not approximately 1.5. This shows that on that year, the company not able to pay its short-term obligation on time. The bar chart represents quick ratio for different four companies over the 3 years. Sindarbi and FGV Plantation show the company quick ratio with less than 1.0. This is not uncommon and it should not cause an alarm. The company that has a quick ratio of less than 1 may not be able to fully pay off the current liabilities in the short term. Besides that, the company IOI Plantation and Kuala Lumpur Kepung Plantation, they have higher ratio. This is show that the ability to pay its short-term obligation without rely on inventories. And both company having a quick ratio higher than 1 can instantly get rid of its current liabilities.
Assalamualaikum and hi, my name is Nur Amalin Nasuha and I will be explaining about leverage ratio. As you can see, leverage ratio is divided into two, which is debt ratio and time interest earned. Okay, a leverage ratio is any one of several financial measurements that look at how much capital comes in the form of debt, which is loan, or assesses the ability of company to meet its financial obligation. Debt ratio. The ratio measures the amount of leverage used by a company in terms of total debt to total asset. A debt ratio greater than 1.0, which is 100%, tells you that a company has more debt than asset. Meanwhile, a debt ratio less than 100% indicates that a company has more asset than debt. Okay, this chart shows that ratio for four plantation company, which is Kuala Lumpur Kepung, Saim Dabi Plantation, FGV Plantation, and IOI Plantation. As said, over 3 years, Kuala Lumpur Kepung goes down little bit by 0.01% in 2018 and increased 8.6% in 2019, while Saim Dabi Plantation goes up in 2018 and maintained in 2019. Furthermore, FGV Plantation debt ratio rise every year. Meanwhile, IOI Plantation sink until 50% in 3 years. Okay, in general, many investors look for a company to have that ratio between 0.3 and 0.6. From a pure risk perspective, a debt ratio of 0.4 or lower are considered better, while a debt ratio of 0.6 or higher make it more difficult to borrow money. Time interest earned. Okay, from an investor or creditor perspective, an organization that has time interest earned ratio greater than 2.5 is considered an acceptable risk, while companies that have time interest earned ratio less than 2.5 are considered a much higher risk for bankruptcy. Okay, the bar chart represents time interest data has changed over 3 years between four plantation company. It can be seen that Samdabi Plantation and IOI Plantation data fluctuate while FGV Plantation and Kuala Lumpur Kepong keep decreasing over 3 years. Okay, this shows that IOI Plantation in a great state for investor to invest. However, the other three company has potency to fall bankruptcy.
Activity ratio is a type of financial metric that indicates how efficiently a company is leveraging the assets on its balance sheet to generate revenues and cash. Activity ratio divided by 2, which is average collection period and fixed asset turnover. The bar chart shows the average collection period for different company, which is Kuala Lumpur Kepong, Simdarbi Plantation, FGV Plantation, and IOI Plantation over the 3 years. Over the 3 years, IOI Plantation had the highest average collection period. It is slightly high when you consider that most companies try to collect payments within 30 days. It means that the company is not as efficient as it needs to be when staying on top of collection account receivable. However, increasing ratio over the past 3 years reflect that the company has a problem in collection debt. Based on the graph, FGV Plantation is the lowest average collection period. It is important from a timing perspective to have a company prepare an effective plan for covering costs and scheduling potential expenditure to further growth. Last but not least, Simdarbi and Kuala Lumpur Kepong had almost similar for average collection period. The smaller the average collection period is, the better it is for company. It means that the company's client take less time to pay their bills. Another way to look at it is that a lower average collection period means the company collect payment faster. Based on the bar chart, we compare 4 companies to analyze the data for the fixed asset turnover. Simdarbi Plantation is the highest result, which means a high ratio indicates that a company effectively uses its fixed asset to generate sales. Meanwhile, the result data for the IOI Plantation and Kuala Lumpur Kepong is between 1.2 times to 1.4 times. It can be seen that a low fixed asset turnover ratio generally indicates the opposite. A company does not use its asset effectively or to its full potential to generate revenue. To conclude that the lowest data based on the bar chart is FGV Plantation. A low ratio indicates that the firm does not efficiently use its fixed asset to generate sales. Company must be aware that if the fixed asset of a company are old, they will have a large amount of accumulated depreciation and a larger denominator, which will influence the ratio.
Moving on with the presentation, I will be explaining on the profitability ratios. This is a ratio that measures the relative success of the company. It shows how efficiently a company generates profit and value for its shareholders. Generally, a higher ratio is preferred. There are some profitability ratios. For example, gross profit margin, operating profit margin, net profit margin, return on assets, and return on equity. For this assignment, we will only be looking at the operating profit margin and return on equity. First, let's look at the operating profit margin. Operating profit margin relates to the firm's ability to control all costs except interest and taxes in its operation. Higher ratio is usually preferred. By looking at the graph, in year 2017, IOI Plantation generated the highest operating profit margin as compared to the rest. KLK Berhad comes second, followed by FGV Plantation and Simdarbi Plantation. In year 2018, the same trend was noted. However, FGV Plantations suffered great loss, making its operating profit margin decreasing into negative value. In year 2019, IOI Plantation is still making the highest operating profit margin, followed by KLK Berhad and Simdarbi Plantation. Meanwhile, FGV Plantation has managed to recover a little, but they were still suffering losses, indicated by the negative value of the operating profit margin. From the span of 3 years, only 3 companies are still generating operating profits, which is IOI Plantation, Sime Darby Plantation, and KLK Berhad. Among these 3 companies, the operating profit margin for IOI Plantation and KLK Berhad have been decreasing each year. The opposite was noted for Sime Darby Plantation, as its operating profit margin has been slowly increasing each year. FGV Plantation, however, is still trying to recover from the losses as noted in year 2018 and year 2019. Next, let's look at the return on equity, ROE. ROE measures the return earned on the common stockholders' investments in the firm. Higher ratio is generally preferred. By looking at the graph, in year 2017, IOI Plantation has the highest ROE as compared to the rest. In year 2018, IOI Plantation is still leading, followed by Sime Darby Plantation and KLK Berhad. Since FGV Plantation suffered great loss in year 2018, it has affected their ROE as well. It plunged to minus 17.8%, indicating that the company is not able to give returns to its shareholders. In year 2019, the ROE for IOI Plantation plummeted into half of its original value as compared to previous years. Sime Darby Plantation and KLK Berhad also have decreased ROE. Meanwhile, FGV Plantation was able to increase its ROE value. Nonetheless, the ROE value is still negative. For the past 3 years, IOI Plantation increased its ROE from year 2017 to year 2018, but decreased its ROE from 2018 to 2019. A decreasing trend is observed for Sime Darby Plantation and KLK Berhad. This may suggest that these companies are returning less earnings to their shareholders each year. FGV Plantation, however, is still unable to give returns to its shareholders since year 2018 and has been trying to recover from the losses.
Hello, I'm Anishwada. I will explain about the last part, which is market ratio. Market ratio is to evaluate the current share price of publicly held company stock. Market ratio also to determine whether a company share are overpriced or underpriced. Dividend payout ratio is to measure of dividend payout to shareholder relative to the company net income. In this slide, I also show the formula for dividend payout ratio. Okay, let's see to the next slide is comparative analysis dividend payout ratio. The bar chart show the 4 different company, which is Kuala Lumpur Kepong, FGV Plantation, IOI Plantation, and Sime Darby. Sime Darby in year 2070 is increased. It means that the company is reinvest less money back into its business, while in year 2018 and 2019 keep decrease. For another 3 company had the lower dividend payout. To conclude for the bar chart, virtue of investing in business growth, the company will likely be able to generate higher level of capital gain for investor in the future. Next slide is about price earning ratio. Ratio is for valuing a company that measure its current share price relative to its per share earning. Okay, in this slide, I also attach the formula for price earning ratio. Based on the bar chart graph for comparative analysis price earning ratio, FGV Plantation with a higher price earning ratio in year 2017. But in year 2018, Kuala Lumpur Kepong is the higher price earning. In year 2019, Sime Darby is the higher. It means that A higher price earning usually indicate positive future performance, and investors are willing to pay more for this company share. A company with a lower ratio is Kuala Lumpur Kepong in year 2017. In 2018, the lower price earning is another 3 company. A lower price earning ratio is usually an indication of poor current and future performance.